Okay. Peter Rose, Longwood Currency Trading. How do you view candle size? What does that mean? How do you look at that? Well, here's something of a different size, but I want to make a comparison to it. You know, the other day I was out here and I showed a big puddle of water. You know what happened to that puddle of water? This is what happened to the puddle of water. There's almost 4 inches of ice. You can see I've chopped through, Sue and I chopped through most of it along the driveway, but there's about 4 inches there. But that's that puddle of ice. Now, that ridge of ice of almost 4 inches tells me something. There was a shithouse full of water on this walkway. There was a lot of snow that melted, and it caused that, when it froze, to create that size of an ice. So what does that tell you? There was a lot of water involved. If there wasn't much ice, what would that tell you? There wasn't a lot of water. Pretty obvious, huh? Well, look, it's 5 below out here. The dog's feet are cold. I'm going in, and we'll pick this up in a minute. All right. Throw another piece of wood on the fire, and we're ready to talk about candle size and what it means. So what does that ice mean? You know, I mean, you could draw a graph of ice thickness on Peter Rose's walkway, and therefore say the weather during those periods of thicker ice was more severe than other periods. And so when you look at a candle, you're comparing an individual candle size with, say, the ATR. I mean, that's what it's for. But you know, the ATR is a forced construct that we all use. It's a 14-period average. What about a 20-period average? What about a 60-period ATR? Or a 5-period ATR? What's so magical about ATR? What does ATR have to do with anything? I think that the reason that they've chosen the 14 period is that's basically, you know, a 10 or 12 day period of time. You know, 2 weeks, let's call it 2 weeks of trading. You've got 10 days, 11, 12, 13, 14, 2 weeks of periodicity, and you're smoothing out in that 14 periods 4 days of inactivity. Regardless, it's a pretty good time period. If you didn't know that, and you're trading currencies, and you're not having the success that you think you should have, perhaps you should find somebody that can explain this stuff to you so that you understand what it is that you're looking at and why you might use that. When the short MA crosses the long MA, go long. Oh man, come on, please, spare me. The ATR is an indication of the average over a long term. And so let's say that the average 14 period graph of my ice depth would now be spiked at 4 inches. And in fact, the 4 inches is an anomaly because in the 5 years that we've lived here, I've never had four inches of ice on the walkway. Now, we could look at that and we could say, well, it's been a really bad winter. But it's been more than a bad winter because last fall, before this winter started, I had my shingle roof and gutters removed, and I replaced that with a metal roof. Now that metal roof is slanted toward that walkway, and so we're getting a lot of stuff coming off the roof that didn't normally come off the roof. And so there's been a physical interruption to the natural weather of the area that has caused this discrepancy in the ice collection on the walkway. We would maybe call that fundamental analysis. I've changed the parameters of water getting on and collecting on the walkway by installing a metal roof. I installed the metal roof not to create more water on the walkway. I installed the metal roof obviously for other reasons, but the effect of that was a frozen pond of 3 inches, 3.5 inches, 4 inches in some areas of depth. And Sue and I were out there chopping that all out the other day, and I thought, to hell with this. This is stupid, because the next time it snows or rains and melts, this is going to come up again. I'm just chipping ice. We'll throw sand on it. So the issue with that larger candle than normal, because my average price or average ice height over winter periods has been negligible, maybe 1/8 of an inch. And you get out there and you throw some salt on it and it goes away. So to have a 4-inch standing ice bar there is something that you need to consider. But what happens in the trading? You get these large candles. What does that mean? It means that there are more orders coming into the market. There's more snow and water coming down and coming off the roof, and that's what's causing this ice to form. Now, I had ice forming before with the shingles and the gutters because the water would still get there, but it wasn't like this. So is this a black swan event? It was not a black swan event. I caused it by putting a metal roof on the metal on the roof. And so are those 100, you're finding a price, well, I've mentioned several times that last year I took a picture of a 132 pip pin bar on a 1-minute chart on pound dollar. And what caused that? Order flow. Okay, well, that's what caused it, but why did the order flow come? That's what I think a lot of the educational process out there that you're running into is lacking in. And they may say order flow, but then they're not going to back that up with an understanding of what that means to you from not only a technical manner, but also from a fundamental standpoint. What caused that 132 pip pin bar? What, did somebody get shot? Was there some economic news that released, oh, gee, the central bank is going to raise interest rates from 0.03% to 1.8%, and people go crazy. How do you determine that? Well, the Bodog just came in to say hi. All right, I know you miss Sue. Good boy. All right. There's another indicator. When he's whining and wandering around, he's looking for Sue. If Sue is here, he's right on her heels. So life has all kinds of indicators that show us something. And so that candle size is showing us something. It's showing order flow. What's order flow? It's intent. What do people's belief, what is it telling them? Because FOREX trading is a zero-sum game, somebody wins and somebody loses, there's two decisions that are being made. One person is saying, I'm going to buy this because I think it's going to go up, and the other person is selling it, saying, I don't think it's going to go up anymore. The person that sells it, if it does go up, is the loser because they're losing, technically, on that continued gain. Even though they might have made money on it, they're losing on that projected gain. If the person who buys it and the price turns around and goes down, the person who sold it won and the person who bought it lost. So there's intent there. Well, what causes that belief? What causes that belief? It's looking at the news, or it's listening to Ed on your shoulder that's whispering to you, the price is going to go up, Peter, it's going to go up, you got to get into this shit right now. And somebody else on the other side is going to take my order because they're going, it's going to go up any further, you dumbass. Well, who's right and who's wrong? Well, we don't know until we see the size of that candle. And if the size of that candle is increasing and price is going up, then you got to figure there's a lot of people that are saying that the price is going to go up. So what are you going to do? You're going to sit there on a candle that is now a little bit over ATR and is moving up. That's called what I call momentum. And I do it because I have a bachelor's degree in physics and a lot of math. My use of the term momentum and my understanding of the momentum is quite a bit different than some casual person who says, oh, it has more momentum. Well, what do you mean by that? What's your understanding of momentum? Do you understand that momentum is a vector because the velocity component on the mass times the velocity is a vector, it has a magnitude and a direction, and that's what momentum is? Do you understand that? And what does that mean? To me, as a technical person, not a technical analyst, but a technical person, it means something totally different than somebody who just says, well, it's got more momentum. It indicates more order flow. And what causes the order flow? Belief systems in the traders. Now, because it's the retail traders that are we're the tail. It's the institutional traders. Are they trading on belief? They're not. A customer has come in and said, I need you to buy this currency and sell that one because we need to buy $2 billion of product from that country, and we need to do this transaction. And so is there belief in the movement of that candle? No, it's economic. And because the institutional traders have 85% of the dollar volume in the market is not based on hope, fear, and greed. A retail trader may be trading on hope, fear, and greed, but the bank trader is not. He's trading on economic orders. And so the size of that candle that's manifest on your chart is based on the size of the order that guy has, not what his belief that the market is going to do. It's his awareness that the client is going to be unwilling to pay more than this. So he's accumulating it until he gets to a point where his customer doesn't want to buy it anymore. Then he'll go in, maybe, and sell the shit out of that thing, pin bar it down, because it doesn't cost him that much, and then he'll start buying again. And in the net aggregate over all of that buying and selling, it creates a range that these candles are moving in on the smaller time frames as he executes his order. Now that may go on for weeks if he's got a big order. And so you have patterns that form on the shorter term time frames that if the guy's doing it over a longer time frame, you're not really seeing that unless you go up and you look at the larger time frames. That's why you have to look at the larger time frame. What's going on? You know, on a 5-minute time frame, you may get this jaggedy type of movement that ultimately ends up over an hour's period of time. You get a candle that 4 candles that have crept their way up. But if you go out to the hour time frame, you get 1 candle. Now, is that candle over the ATR of the hourly chart? And what does that mean if it's not, but you have a large discrepancy between the ATR and a 5-minute candle and its candles? What are we dealing with? Maybe we're dealing with a small order, or maybe we're dealing with a lot of retail traders on that 5-minute chart, because the banks aren't trading on the 5-minute chart. They don't give a shit what's going on down there. That's where the retail traders are trading on. They're trading up on the hour and the 4-hour charts. But if you think as a retail trader, you're going to trade up on the 4-hour and the 1-hour charts and you're short stacked on your bank, you're not going to win that game. Because the institutional trader has more staying power than you do. It's like going into a poker game where everybody's bought in for $1,000 and you've come to the table with 100. Do you really think you're going to be able to win in that game? Anything? You're not. You're not. So how do you think you're going to compete in the same swimming pool that the Olympic swimmers are swimming in? How do you think you're going to compete on that? And yet all these educational resources are telling you, trade up on the hour chart, trade up on the 4-hour chart. Well, that's great. Maybe they've got a $40,000 account or a $300,000 account. So they've got some staying power. Do you think they're trading with $400,000? They're not. They're trading with $30,000 or $40,000 of that. Because they need to have a lot of dry powder to withstand 150 or so point swings in the price in order to get to their 300 or 400 pip profit target. Because once you're in the trade, from a long-term standpoint, there's no reason for you to get out. Because as soon as you went over your buy-in price, your entry price, you're in profit. Now, profit could be 3 pips, 10 pips, 100 pips. It doesn't make any difference. Then you're going to trail your stop behind that to capture as much of the move as you can. The problem is if you stay in that trade for a long period of time and you don't get paid, let's say you were looking for 400 pips because you're trading on the daily with it, and the ATR is 80 to 100 pips. So you're looking for a 400 pip or 300 pip gain. And you go in there and you're trailing your stop and you get whacked out at 50 pips. We made 50 pips. But you had to hold that trade, let's say, for a week. And you made 50 pips. But you wanted to make 300. You made 50 pips, it's a good hit. But you weren't paid for the time that you were in the trade. Because you weren't paying attention to what the bars on the candle, what the candle size, the momentum of that candle, the relationship of the size of that candle or series of candles is to the ATR, and what's going on the upper time frame charts that would indicate whether this is going to be a long movement or whether it's going to be you're just part of retail chop. You could trade the retail chop because you know what's going to happen. 90% of the retail traders fail. So all you got to do is fade what they're doing. If you're down on the short-term time frame, it's a lot easier to trade down there because you're only competing with 15% of the market. Once you step into the Olympic pool, now you're swimming with the Olympic swimmers. So how are you judging this momentum, this candle size differential? The more important question to ask is what time frame are you doing that on? And you need to really understand that because you need to choose whether you're going to be a long-term position trader or you're going to be a swing or short-term or even a scalp trader. Because the rules are going to be different. And if you think you're going to trade sometimes long and sometimes short, and you don't have a couple of years experience or 2 or 3, 400 trades under your belt, you're kidding yourself. And so the size of the candle has meaning on the time frame that you're looking at, but might not have that same meaning on a different time frame. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.